Mr. Dahiya was a retired colonel of the Indian Army, and when it came to managing wealth, he preferred investing in insurance policies. By 2008, he had invested about 20 lakh rupees in 5 different policies, and the agents that sold him these policies used to provide him a return of 5 to 7% every single year. Having spent all his life serving the country, he had little knowledge of how different investment types work and the risk involved. But his agent used to assure him that his money had been invested in a safe place, in something similar to fixed deposits. And the 5 to 7% return that he received every single year only reinforced his belief, so he did not look into it too much either. But when the global financial crisis of 2008 hit the world and the Indian stock market plummeted because of it as well, Mr. Dahiya's insurance agents told him that he had lost more than 2/3 of his investment. His investment of 20 lakh rupees was now less than 7 lakh rupees. But he could not believe this, and he went to the offices of the insurance companies, as he was convinced that this must be some kind of a mistake. But there he was told that his money was actually invested in the stock market and not some safe fixed return instrument like an FD. And even though he was completely innocent, he could do absolutely nothing about it because he was the one who had signed off on this insurance policy through the agent. When Colonel Dahiya told his son Yashish about how he had been scammed, he dug into the topic and did some research. And he found out that this was a pattern. Thousands of innocent people were being tricked and looted by insurance agents all across India. So there were two types of insurance policies. One was your pure health and life insurance policies. In here, you gave a sum of money to the insurance company and then it covered your medical expenses in the case of health insurance or paid your nominee a fixed amount on your death in the case of life insurance. You were not paid back any returns on the amount in any scenario. Second were your investment cum insurance schemes. In here, the agents told you that you were combining the safety of insurance with the potential of returns on investment. A portion of your money went towards life insurance, while a majority was invested in stocks and bonds to generate returns over time. So if you die, your family will get the insured amount. But even if you do not die, you will receive a fixed return on your investment. But the reality in this case was far more complex. The details about where the money was being invested and the risks involved were not communicated with the investors, which resulted in innocent Indians being scammed by these agents. The agents used to work on commission. They earned a fixed percentage on every policy that they sold, and the commissions were usually higher on insurance policies that carried more risk for the customer. So the agents were incentivized to sell risky investment to customers, and the customer did not even know where they were putting their money due to a severe lack of transparency. Yashish Dahiya, the son of Colonel Dahiya, also found that less than 2% of customers knew about the benefits of their policies back then. And a whopping 97% of insurance products sold in India were investment cum insurance schemes. Just 3% were pure health and life insurance policies. This was when Yashish Dahiya decided to tackle this problem in our country. And in 2008, he established an online portal named PolicyBazaar.com, a startup that would go on to change the insurance landscape in India forever. PolicyBazaar is an online insurance aggregator, and its parent company, PB Fintech, is one of the most successful tech startups in India. It is currently listed on the stock exchange and it is worth nearly 50,000 crore rupees. And PolicyBazaar virtually owns the digital insurance marketplace with a share of 93.4%. So how did Yashish Dahiya manage to turn his father's problem into one of the biggest tech companies in India? Well, as I said, that story began in 2008 when Dahiya decided to solve the problems with Indian insurance. Apart from a lack of transparency and agents essentially being scammers, there were a bunch of other issues with the existing system. The sales cycle of buying an insurance policy used to be extremely long. The agent would visit your home, explain everything, and then fill out the paperwork with your help. Moreover, the agent was usually affiliated with just one company, and he obviously pushed the schemes of that company, so it was not possible for you to compare plans between different insurance providers. And even after going through all this hassle, there was no transparency. The customers were usually unaware of the risks as well as the benefits offered by the policy. And finally, Even if you managed to go through this tedious process and get a policy, if you ever needed to file a claim, it was an absolute nightmare with no assistance provided whatsoever. So in an attempt to address some of these issues, Yashish set up PolicyBazaar.com. It was an online tool that helped you compare different policies in a single place. They used to take out all the jargon and technicalities, making it easier for the customer to read the fine print and compare the actual offerings of each policy. Once a customer made a decision using their comparison tool, they would take that lead and forward it to the insurance companies. And the company paid PolicyBazaar a commission on each lead. So PolicyBazaar was solving the biggest customer concerns of transparency and pricing, essentially acting as an insurance agent, but one that actually cared about the customers. Their growth was slow and steady as they started onboarding more customers and gained the trust of insurance companies as reliable partners. But all of that changed in 2011. This was when the regulatory watchdog IRDAI came out with a new regulation. It made a clear distinction between an insurance broker and an insurance aggregator, and introduced a price cap on the money that platforms like PolicyBazaar earned on leads and commissions. It also barred such platforms from displaying ads and rating products. So the regulation basically said that PolicyBazaar could earn only a certain amount per lead, and that amount was made so small that it made the business unviable. At this juncture, PolicyBazaar had two options: either close down the business or turn into an insurance aggregator, where they would have to take on the additional burden of converting the leads into sales on their own. To do this, they would need to set up an entire sales cycle and backend team that would chase the customer to close the deal. Necessity is the mother of all creations, and PolicyBazaar instead started building an entire sales team of its own. And they managed to be successful. A government regulation that initially looked like a setback was a blessing in disguise that changed PolicyBazaar forever. From 2012 to 2015, the policies sold by them went up from just 40,000 to 6 lakh. And since they now had end-to-end control of the entire sales funnel, they unleashed the true power of technology and innovation. PolicyBazaar began recording all the calls with customers and started building a gigantic repository of customer data. This voice data was converted into text and then analyzed. And that was when they realized that there were 3 keywords that were being mentioned the most on these calls, which were death, disease, and disability. But surprisingly, none of the existing products and plans offered by these insurance companies catered to these concerns. So PolicyBazaar began collaborating with these insurance companies, and they made all of their data available to them, based on which they introduced insurance plans that actually cater to the customer's concerns, which made selling a lot more easy. But the innovation did not end there. They introduced several other tech-powered features that simplified the entire process, like e-KYC, which eliminated the need to fill out forms, and self-video inspection of the car for renewals. When renewing their vehicle's insurance policy, the customer could now simply share the condition of their vehicle with an agent over a video call. The need for an agent to come to your home, inspect your car, and eat up your time was suddenly eliminated. And as a result of this innovation, they saw a 106% growth in lapsed policy renewals in just 3 months. And where processing a claim earlier used to take 7 days, it now takes just a few hours, along with a reduction in cost for the insurance company by Rs 350 per policy. This may sound like a small amount to you, but with the lakhs of policies issued every single year, the savings run into crores of rupees. But no matter how good a product is, it is of no use if you cannot get people to buy it. And PolicyBazaar faced a problem that was different than any other e-commerce platform. Usually, when you make a purchase online, there is an instant reward for the customer in the form of receiving a product or service that he can use. However, in the case of insurance, it is more of a defensive purchase. People buy insurance hoping that they would never use it. So selling insurance was quite tough. And to achieve market penetration as well as to increase the size of the market, PolicyBazaar knew it had to get creative and aggressive. Since the obvious problem in the market was a lack of awareness, all of their campaigns were centered around conveying the benefits of getting insurance and the cons of not buying insurance. Playing on the fear factor of customers, their ads conveyed that not having the right life or health insurance will leave your family in distress. So you had to buy insurance not for yourself, but for your family. The ads also want customers to not get fooled by agents and compare insurance plans before buying one. And to really generate brand recall and awareness, they had well-known celebrities as their brand ambassadors like Akshay Kumar, Pankaj Tripathi and Kapil Sharma. And with this perfect combination of having the right message conveyed by the right people, they started spending heavily on advertising. Google, Facebook, print, media. You could find PolicyBazaar ads on literally every platform. And their marketing has been so aggressive that by 2020, they had already spent more than 1000 crore rupees on advertising ever since they started in 2008. But PolicyBazaar's habit of being one step ahead of the insurance companies does not end at innovation or advertising. They offer excellent after-sales support as well. Irrespective of the company from which you are purchasing the policy, if you get it through PolicyBazaar, you get a dedicated relationship manager who helps you with the claims process as well. When you actually have to go to the hospital, you are under a lot of stress, particularly if it's an emergency, and filling out the paperwork and dealing with the claim process is the last thing you want on your mind. By having someone else do it for you, PolicyBazaar established a trust and brand recall that is unmatched by any other provider. The result of this transparent offering, aggressive marketing, and excellent after-sales support is that the average customer repeat rate in the industry is 65%, but the customer repeat rate for PolicyBazaar is 95%. With a 93.4% market share, PolicyBazaar has sold over 2 crore insurance policies since its inception, and it has launched a similar offering for loans named Bazaar, which is turning out to be an equally magnificent success of its own. If you made it this far, please share this video with one person who you know will find it interesting. Subscribe here and follow me on LinkedIn. The link is in the description below. Until I see you in the next video, goodbye.